right, good morning, everyone. Where the hell am I? All right, is that there? No, okay. All right, we got that. Oh, let's hide that. There we go. All right, good morning. Fed expectation reset. All right, whew. Let me lower this guy. Okay. All right, guys. Good morning. Welcome to Beyond Charts Morning Brew. Did you miss me? All right, but if you don't worry, if you did, I was a little under the weather. We're gonna get to it. We're gonna be ready. I have been giving you a lot of the levels, a lot of information on Patreon. So if I'm not here, I will always be on the Patreon page, giving you a level, giving you some fire information. Give yourself some time to dissect the information, because usually we hit it right. Today, amazing opportunity today. So the biggest thing yesterday, as we found out, is that oil was broken, right? And we kind of knew that. I've been setting that up for you guys over the course of the Patreon page over the last couple weeks. Oil was at 110. It really rallied up on Monday, Tuesday when the markets were closed, and it ramped up a lot. And I think it was great that it ramped up on Monday and Tuesday, and it was great that the markets were closed, because everything that goes up that fast comes down that fast. And I think it was the news with Gaspon, some news at Gaspon, and I think that kind of brought oil down below. Where was it? Below 100, and it kind of broke at the same time that the S&P broke down as well. But right now, oil is basing right now. So oil right now did break 100, is back to this $100 level. A big level we got to look at oil here. It's going to be at this 106 level, and we're going to see if it's going to hit its head there, then kind of consolidate between 100 and 106. That's my suspicion. Now, why is that important? We're going to see how the market's going to react. We knew how the market reacted when it broke 100. We rallied, right? Because when it combined with that, and also with these talking heads, and I talked about this weekend on Patreon, that they said that mostly that inflation is peaking. And when you have enough voices saying that inflation is peaking because we have a midterm election and politicians will be politicians and the market is going to react to politicians and the Fed is going to react to politicians, this is what normally happens. So again, this is why it's important to stay pertinent. If you need help with this, it looks like my internet just went down a little bit. Let me see if I can... there we go. So Google Chrome is on. Okay, and everything else is off. All right, there we go. All right, so that should ramp up the internet here a little bit. Okay, so with that being said, yeah, looks like we should be back on. Yeah, we're looking good. All right. So with that being said, again, we got to watch oil at 100, 106. I think that's a good level for it. If it goes above a 106, I think we're going to see the market kind of crater a little bit. So once again, we do have the Fed minutes coming out at 2, or I'm sorry, I'm on the West Coast. So that's going to be 11 o'clock for us, right? 11 o'clock, which just gives us about 2 hours before the market closes. Now, the market will get shady. There's going to read a lot into it. Remember, there's going to be another level of the market. So we'll see how that works out. Who's out there? Let me see. Oh, Josh. What's up, Josh? Yes, what's going down? I had to put the trip mode here because I saw I paid for the higher internet here, but it still seems a little wonky, but we'll see. So ultimately, we're going to be watching oil to see how it behaves, but I think that was a big push yesterday for the market, with combination of midterms being around the corner. Remember, we're in July. The markets, a lot of people have suffered from the markets, but again, that's not everybody that suffered from the markets. The majority of people are suffering from inflation and high gas prices. So ultimately, we want to, the White House is coming out again saying there's an inflation strategy. it's all short term. Nothing's going to be permanent. But again, it's all going to be theatrics for midterms. Just know that. So at the end of the day, we might have these short rallies and we're going to trade them, but I don't think it's going to be long term, at least anytime soon. I don't think it's going to happen. But just my personal opinion, watch the order flow just for anything. All right, so let's get into where the markets are going to be, because we usually trade XPY, SPX, and the overall markets. What are we looking at here? Well, as you can see, if we look at the XPX and just looking at, the most recent time here, this right here, this is a supply zone, right? So we have a supply zone where the yellow is. We have another supply zone right at this area here at 39.50. And then we had a demand zone right at this bottom at 39.69. Now, this is the normal XPX. Remember, this only gives limited information, but enough information for how the American market is trading. If that's where you're trading, that's fine. But we also look at the ES, because the ES is going to give you a much broader perspective where the overnight or the international bots are triggering as well. But what we can see is that more than likely, we're probably going to trade all the way up to here. That is a possibility. And conjunction is always going to trade where the 50-day is going to meet. Remember, the theory about the 50, price always is going to balance at the 50. It might take a little while in the longer time frames, but overall, it does a pretty good job of coming back up there. Now, we've been away from the 50 since June 8th. Currently, right now, it is July 5th, so about a month, and usually it lasts about a month or so. We also have a nice little squeeze coming in on the NASDAQ in a downtrend. So what is that going to tell me? Is this squeeze? Well, we're probably about another 15 sessions away from the squeeze actually developing. But when we do see the squeezes in any time frame, especially in the longer time frames, they're much, much more powerful. Just know that. Very, very powerful when you see those in those time frames. Yeah. All right, and so now what do we have? We have the Russell, same type of thing. Russell is basing here. We do have these levels we have to take a look at, that there buyers are coming in. Okay, let's look at the overall ES. We'll look at the VIX first and next. The VIX, as you can tell, this week, and this is why I draw the boxes, because I want to know exactly what is the range of the VIX. And as you can see, I really didn't draw the box from yesterday, but I'm going to draw it in right now, just to kind of give me a perspective. So today, as you can see, the VIX dropped pretty significantly so far, and that means that they're doing a pretty good job of managing the fear perspective, right? And this is what I noticed last week. I didn't really write about it. I was going to, but I didn't want to overwhelm you guys. But I noticed that the VIX last week, despite the sell-off that we had last week, the VIX didn't really climb. So that tells me that this is a very well orchestrated sell-off and that funds are very well hedged compared to 2008. So I think that the majority of the VIX is coming in here is not really, they're not capturing a lot of institutions with their pants down. They're catching a lot of retail investors with their pants down, but not a lot of institutions. And I think that's the difference of 08 to now, is that they're really controlling the fear so far. That's what I'm noticing, okay? But again, as you can see, we have the ranges of the fear that they're controlling, right? And we got this 35 up until this 24. And even though we are continuously dropping, but there's not this extreme fear that's occurring where we have both institutions and retail just unloading. So that's the plus that I'm noticing, and this is why I think it's orchestrated, like anything else. We do have the 10-year note that is coming down. That's a plus, and this is the TNX. It is coming down. That means the TLT is going higher. Now, that means that 30-year mortgages run out at 2.73 plus a premium, so they're right around 5%, which is good because they were up to 6.5%. It doesn't mean that it's not going to go back up there. I think it will. But I think we have midterms. But again, there's a problem with, do we fight inflation or do we keep our corrupt politicians still in office, right? And have them, gaslight us. It's up to us. But again, it's we the people. And I think we the people are pain averse. And anything, we don't like to take the pain. So anyway, that's a whole other story. Let's go into the E-minis here. As you can tell, looking at the E-minis on a daily perspective, I'm getting, I'm not really like warm and fuzzy, but if we do break certain levels here, I think that we could probably go higher. As you can tell, we have now new supply demand levels. And again, the new supply level was up here. I'm going to move this over here just to kind of make this, but we have a new supply level right in this level, and the demand level was right there. We could possibly have a new demand level right in here. We'll see how this works out. But right now, 37.37, it looks where the buyers came in. I talked about this, and I noticed in the last couple of days there was a big buying operation coming in at 37.50. Obviously, that is still there. We came down to that level, and it got bought up in conjunction with oil coming up. So again, can we go higher this week so far? So far, the Asian markets, they produce, and this is important about looking at the candlestick. So far, it was a doji, meaning that it was a very neutral day. That's significant right now. The European market is still active. They're about to close pretty soon as we turn on. But again, it's the American market that's really going to move the market. We just want to know if our counterparties or parties overseas are thinking the same way that we are. Okay, as far as let's look at where we're at as far as dissecting this news. Yes, I said if we come down to 3,800, I think that we're going to get bought. We did hit my goal of 38, well, close to it. I said 38.50, I think we can hit. Sometimes these levels we hit overnight. So just know that the overnight action on this was 38.48. We kind of hit it. We hit it twice, but again, we're not selling off. We're in this tight range so far. So let me dive into this 2-minute chart here so we can see this thing a little more clearly. As you can see, right at that 18, the rally did continue even after the market, and it hit this 38.42, came down when the Asia market, it was kind of prepping. 38.49 came down. 38.48, 38.48. Okay, came down. And then we had this little sell-off here to 38.08 and just kind of stayed in this range so far. So again, a very neutral day. We're not selling off, so they're not taking profits yet. And right now, as we speak, we're seeing, right now that the market has rallied off this low of 38.14. And again, starting to rally. We had a nice little pullback of 38.23 with the MACDs breaking zero. And it's probably going to go to these levels of 38.37 and maybe back up to where it's having a hard time breaking above 38.48. Again, that's how I'm reading the markets. But again, it's 5:47 a.m. equivalent to 8:47 a.m., which is probably we have another 45-minute candles divided by 2, so we have about another 24 candles on the 2-minute time frame. It's up to you. You can use the 1 minute. I discussed this in class. You can use the 1 or the 2. The 2 is going to give you a little bit more smoother transitions. The 1 is going to give you key pivot points. But I would say go into the 2 minutes if you're having a hard time with the price movement. The 2 minute is going to give you a much smoother transition. So adjust to the 2 depending on what you want to use. You can go to 5 minutes as well. Okay, but that's what I'm noticing here on the 2 minutes, and it looks like on the 15-minute time frame, it's about to squeeze and break out. We're getting a fresh set of MACDs. So let's see, could it break 38.48? This will be the how many times now? 1, 2, 3, 4. Well, a lot of times here. 1, 2, 3, 4, 5. This will be the 6th time it's going to try to break. So again, 6 times a charm. Is it? Is it going to be at the open? We'll see. As far as the hourly time frame, again, as I said yesterday in the video, that I sent out periodically, I'll send out this video to you guys. Adjusting where the plays were at. But As I sent out, I said that more likely we're probably going to test those levels. I'm just making the yellow line that I drew yesterday a little bit more extended, and more likely if we break through that, then we'll see another reaction, and maybe that can lead way to 3,900. Don't say it's going to get there. There's a level we have to break above here, and I can't remember. I think it's 3870. This right here, this 3871 we have to break through. But if we break through, then that's going to lead way to about right in here, this 3920. So we'll see, but it's moving right now. The markets are moving. In other news, let's look at, so we're looking at that right now. We're going to be looking at the SPX weighted index, see how that rolls. Let's look at the overall. There's a few here that I want to look at. Again, Google is moving too. You can't miss on Google. Google is exploding. It also exploded yesterday. That's one that I was watching. Google is gonna also has a split coming up, and that's coming up pretty soon. So remember, it is probably gonna move into the split. We got Amazon is moving. It's kind of unplayable because it doesn't move that much. Tesla had moved dramatically as well. And Apple. Now, Apple did get a downgrade today, which is not a big deal. It got downgraded to $130. It's trading right now at $141, so that's only about $11, which is equivalent to probably 100 points on Apple if you take it in consideration of all the splits that it has done. Now, CMG did rally as well. Again, this is probably going to prop all the stocks as well. So pick and choose which one you see. If you see the squeezes, again, as you can see, squeeze, little squeeze, but you have this squeeze on Google here. You have Apple about to squeeze on a downgrade. That's pretty interesting. We have Apple, Tesla about to squeeze. Amazon about to squeeze. So if the market rallies, and I mean the SPX, the NASDAQ, and the Russell continue to go higher and start breaking above, then you're going to see these continue going higher. So again, is it worth taking a shot? Absolutely. And again, guys, in trading, especially if you're day trading, remember the key factor to day trading is really, really simple. You start small, build your account, take shots, lock in those profits, start small, build your account, lock in your profits. Let's say, for example, you make $5,000 one week, take half of that, put it somewhere else, keep going, make small, and then when you have money that you've made, $5,000, $10,000, take your shots with that money and now with the money that you have invested. And that's how you're going to build your account. Unfortunately, that's not how it works. It's human nature. They think, well, I made $5,000, $10,000 this week. I'm going to put it all in and put the $10,000 in. And then guess what? You lost it. So I'm telling you, been there, done that. Not a good plan. Not a good feeling. Ultimately, start small, make your money. Start small to make your money. If it's 5,000, take half, put it away. Take the other half, keep developing that system, keep developing that confidence, and then you're going to observe how the plays are, where the opportunities lie, and you're going to be picking and choosing which ones you want, and then take a shot. Right now, we're all in the class. We're all taking, about 2 weeks, 3 weeks out, including myself. On occasion, I'll do a 0 days to expiration, but I don't really kind of talk about those because those are high risk. But again, I'm taking those shots with profits usually. But ultimately, guys, I think it's going to be a good day. The markets was looking for some good news. It got the good news with the oil again. And we talked about this at Patreon. I said, I think that this was all kind of, what was the word I'm looking for? I think it was all, midterm elections kind of thing. Yeah, seen this before. All right, guys, that's all we have right now. I think that things are rally. Google looks like it probably wants to pull back a little bit. Let it pull back. Let it set up. Apple, let's see how this Apple thing reacts at 140. If it can go higher, if it can take out 141, it's going to run. CMG rally really, really nice off this $1,300 level. I missed that one. And Tesla rally really, really nice here off this 700. Amazon's going 113. Can it go up back to above 120 or 120? We'll see. Oil's now lingering at this $100 level. So as long as oil remains right at this level, I think then we can rally. All right. So let's see where the E-minis are right now. 38.33. And again, we'll see. All right, guys. That's all we have. Go out there, stay green, stay frosty, go get it. I just put on some opportunities for some stocks that I kind of observed. It's on the Patreon. If you want to support the Patreon, it's only $5. And if you want the class, there's also additional stuff in there. I'm setting the time up for the class this week. Thank you guys for being patient. My throat was not having it. Too much speaking, I guess, and some other stuff that was occurring. But looking good. I will talk to you guys soon. I'll see you in the chat. All right. Take care. Bye-bye.